Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everyone. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you guys this morning. We got a lot to talk about. We got this Qualcomm NXPI thing. I guess it's not going through now. I don't even know what's happening with this thing. This story is never going to end. We're going to die talking about Qualcomm and NXPI. We've got that on our radar. We've got a couple of earning stocks, and we want to continue our discussion that we've been talking about for the past few weeks or so about the breakdown in the financial stocks, specifically in Deutsche Bank. Joel, what's happening this morning in the S&Ps? You're on mute, though. That would help. There we go. Friday jitters. We're all good.
As we go into the quad wage, S&P futures are trading at 27.80, down 8.5 points. Good levels everywhere you go. On the upside, your pre-market high, 88.50. That just happens to be Tuesday and Thursday's closes. On the downside, 27.72. That just happens to be your low from yesterday. So big levels all over the place. We'll see which one we take out first. Bitcoin trading in the red here, 107.50 at 65 and a quarter, 6,000. That's all you got to know about here in Bitcoin critical support. Gold giving back yesterday's gains, down 650 at 1301.80. Silver down a penny, but over 17 bucks at 17 and a quarter. Bring in Dennis here. Dennis, how you doing on this Friday morning?
Pretty good. It's a little bit of weakness here on quadruple witch, but I woke up to a bunch of geese prancing around on my lawn there. The Canadian geese, I know I've complained about them on the show lots of times. And again, they're out there this morning. They're bragging about the Goose report, I guess. So I'll celebrate by cleaning up their poop later.
All right. It was one heck of a report. Spencer, why don't you give it to us?
I got the picture of the geese up on the screen, but let's go.
Hey, that's my house.
Hey, that's your backyard. All right.
There's my geese. Yeah, they got their babies now.
All right. Let's go to the Goose report as I pull the chart up here. Q4 EPS, 9 cents versus 7 cent loss estimate. Not sure how comparable that is, though. Sales, $124.8 million versus $51 million in the same quarter last year. So that's some year-over-year growth right there. The fiscal year sales growth will be at least 20%. The EPS growth will be at least 25%. Again, that's for the fiscal year.
The hot get hotter. That trend continues here. And Goose up 16%. I guess we're back to this. You got to have a retailer going up 20% nowadays. There's always one going down 20 or up 20. Today it's up 20 for Goose. So it's up 17. It's probably going to go up 20. What a rally here, Joel. I mean, it's hard to play these from a contrarian perspective when they're making new all-time highs. We saw these things continue. And, obviously in the case of, earlier reports with Tiffany, they've had the gap and go. Do you think this is what we're going to see in this case? Are we seeing another gap and potentially go?
Well, it's already been as high as 54.63. You just hit that on the last bracket. Now, the bracket before that, you hit a high at 54.50. I mean, what does that mean? That means someone maybe wants out a little bit of a stock there. So above 54.63, continuation rally, but we've had peeled back a buck both times when we hit that level. 55, 55 and a half, 56, throw your orders out there. You'll probably get filled on them.
It's such a momentum market here right now, and it's natural human tendency to want to fade moves, and it has not been working. The best way to make money is what our chat has been doing very well there at Benzinga or premarket.benzinga.com. They've been playing the momentum. They've been playing breakouts. They've been playing stocks. When a stock goes high, they're assuming that it could go higher. And I mean, we've been talking about these IQ. We've been talking about HUYA. We've been talking about SOGO, which was brought to us by Spinner. I mean, every single day, these things are up again. Here's the market getting the beats here this morning. We're down 8-9 handles this morning. And you got SOGO trading up 35 cents. You've got IQ trading up another dollar again. They just don't care. These stocks just continue to go higher. HUYA up another $1.50. It's starting, though, to feel like these are going to go into upside capitulation here, too. I feel like they are very overextended now. I am still long IQ. I am still long SOGO. I'm thinking, today or tomorrow is going to be, a good time to maybe book those profits. So I'm looking here now. It's starting to get a little bit silly. And if it gets silly here today, I'll probably maybe sell these positions.
Well, Dennis, you got to let the world know when you sell that IQ.
If I sell it, then everybody's going to sell it. Is that what's going to happen?
Yeah, that's what I'm going to do. So just,
I just saying, when you've got a stock and I bought it at $18 back, got to be like 1 month ago, right around May 8th or May 9th. You can see, when I was buying it, when it just started to come up and go up again. Actually, I bought it a couple days before that. I think I even took some heat on it. But, I sold some at 25. I sold some at 32. It's now 41. I mean, the stock has more than doubled in a month. That's, an unbelievable move. SOGO hasn't gone quite as far, but it's been a big move for it too. Since Spinner bought it to us 2 weeks ago, stocks went from like 975 up to 1370 here this morning. So you're talking about a 50% move in about 2.5 weeks. It's a big move too. And then Dropbox, the other Momo one that I bought there just 2 days ago, trading at 36. I bought it at 31 literally 2 mornings ago, and it's 36. I mean, these IPOs are so hot. I might stick with that one for a little bit longer because I feel like it's just got started there yesterday, but I feel like this HUIA, this IQ, these things have just moved so far. It's hard not to book.
Could you do me a favor? Could you sell your IQ right here at 41.46, and then we'll see it like down $5 on the day?
Because I sold.
Can you do it, please? Do it.
I don't think it's because I sold. I don't think I'm the guy making IQ trade 433,000 shares this morning. So, no, Joel thinks that's me. If I sell it, it'll go down. I think I've just had some good calls right now. I've just been in a hot. You get hot streaks and you get cold streaks. Sometimes I'm on the show. A lot of my ideas aren't working right now. A lot of my ideas have been working. Thanks to everybody who's giving me props for the DBX. The SOGO totally came from Spinner. I mean, his ideas have been working too. So, we get hot sometimes and we're cold sometimes. Right now, I'm on a little bit of a hot streak. Ride it, I guess, until, you're not hot anymore.
Okay. All right. So we had the Goose earnings, and that was really the only thing on the docket as far as earnings. Oh, we had a few after the close.
We had a few yesterday.
Yeah, let's rip through these 3 we had after the close. Let's go with this order. Adobe, FNSR, and then JBL.
Adobe, thank you. Adobe, yesterday after the bell, the Q2 EPS of $1.66 versus $1.54 estimate, sales 2.195 versus $2.16 billion. So beat on the EPS and sales for Q2. The Q3 guidance EPS coming in higher by 7 cents, $1.68 versus $1.61. Sales guidance coming in higher by a bit, $2.24 billion versus $2.22 billion. So a higher across the board for Adobe.
Stock got hit pretty hard. Then it comes on Mad Money, the CEO, and starts to lift. It's funny how, Jim Cramer can just stop a stock from going down. You want to talk about influence. Nobody more influential, really, than Jim Cramer, at least from a, TV personality. Stock was down at 249. That CEO come on. He talked a little bit bullish. Cramer talked bullish about it. It was like 251, literally, I don't know, like 15 minutes after the airing. So he popped at $2. It's back trading there right now. It's still beat up from the report. A little reprieve there from Mad Money last night.
Was that in between the 2 Bitcoin segments they did?
What is with
you saw
CNBC
you saw Dennis's Twitter. You saw Dennis's Twitter.
You saw my tweet. Anyways, that's all they want to talk about. I mean, and especially on Fast Money. They have like a 20-minute segment, I feel like, on Bitcoin every single day. I mean, yeah, okay, sure. There's some people that like Bitcoin out there, but there's a lot of people that still like stocks. Let's talk, and they haven't mentioned any of these other stocks, that we've been talking about, like the IQ, HUYA. None of those stocks get any love. I guess, and then my Twitter was saying when they do start mentioning those, that's definitely the top.
All right.
I think as far as Adobe goes, they did say on the call that their acquisition of Magento for $1.68 billion, that will be dilutive to the Q3 EPS target. So I think it's the same thing we saw with Walmart, where they make an acquisition and then that in the short term, they punish the stock for the cost in the
Right.
short term, and AT&T too, quite frankly. So
I mean, they've been selling the acquirers. They really have. So, that's why I was surprised with the Qualcomm NXPI news last night. I was actually surprised how much they bid Qualcomm up last night. It was up over $2 on the rumors that China had actually finally approved the NXPI deal. And I actually, was playing it from the short side last night because I just figured I didn't think it was worth that. Now I'm getting rewarded here because they don't know if the deal's going through or not, which we'll get to in a second. So Qualcomm has come back in. But I just mean, it's kind of weird, that Qualcomm would rally that much on that when they've been punishing the acquirers.
Okay, let's real quick.
Back to Adobe.
Yeah, I need to start taking notes on what you're saying here so I can follow. Adobe
tangents. That's all we like is tangents.
Adobe's had a nice range. I don't think you're going to see that pre-market low of 244.28. It just hit that.
I don't think
yeah.
so.
And it's just, buyers and sellers here, they're trying to make a decision right here at 251. Traded, the majority of the stock this morning is traded that arrow. You guys know I like to look at daily levels. I see a daily low at 51 and a daily low or 51.13 and 50.13. So I think 250, that could be, the potential support. If not, if you want to go down and try and peg that pre-market low, did have a couple other days. I'd go 250, breaks 250, 245. That's what I'd be looking for.
Jabil and FNSR both reported last night too. Let's go to their reports and then we can be done with the earnings. Jabil is breaking out over the $30. Must have been a good report.
Why can't
JBL.
Yeah, I was thinking of JABL for some reason. Wait, JBL. Gosh, I can't get
JBL.
I know. All right, bear with me, folks. It's Friday. Q3 EPS 46 cents. That beat by a penny. Sales 5.4 billion versus 4.92 billion. So beat there as well. Q4 EPS guidance 56 cents to 80 cents is in line with the estimate. Sales guidance is also in line with the estimate. A $350 million buyback plan was also announced.
Buyback helps a bit. Stocks over 30. It needs to hold 30. That's your big psychological level. If for whatever reason this breaches 30, then I'd be scared the thing could go negative. So if you're playing this and you're playing this through the breakout of 30, when you're playing a breakout, you want the stock to stay broken out. That's the whole key. So below 30, I don't want any part of it. As long as it's above 30, I guess you can try from the long side, but that is my bogey. $30.
And if they really get this going to the upside, another $1.50 higher. You have a series of 1, 2, 3, 4 lows right at 40 at 31, 4 highs at 31.50. So that's what I'd want to see. I want to see it hold 30, go up and hit that 31.50 area. And if those highs held 4 days in a row, I think at least the first time up, that'd be a good scalp on the short side or a decent place to exit along. Let's how'd FNSR do?
FNSR was kind of the worst one of the bunch. The guidance was fine. The earnings were not. Q4 adjusted EPS 5 cents versus a 12-cent estimate. Sales of $310 million, which was in line. And then the guidance, as I mentioned, was in line. But the Q4 EPS was a big miss.
I mean, you're coming back into an area where you found some support around 17. You had lots of trading between 16 and 17 in May and June. So I don't think it's going to whoosh through all that. That being said, that's all I'm saying. I think you're coming into some support there. It's below 17.
Yeah, I see it. I mean, your pre-market low had a nice range, took it down to 16.50, but I see a couple lows at the $17 area. 16.73, that was your 5-day low. 50 cents away from that. A couple of around 17. So we'll see if that area support holds up on the upside. You want to see that close. If it close at 17.70, that would be some minor resistance. If somehow this turns around, goes into rally mode, double top from Tuesday and Wednesday at 18.20.
Let's move away from earnings. Let's go to the NXPI Qualcomm news that we just talked about. So Spencer, give us just the overall scoop here. NXPI took off on this rumor last night that the deal was approved, but now they're saying it's not approved.
Well, the South China Morning Post, I believe that's the name of the paper, right? The largest English language paper in China. They reported that China had approved the deal. Then Bloomberg and Reuters both came out saying no, not so fast. Didn't happen. They don't know where that report came from, but they were saying that Chinese authorities are waiting on the tariffs that are supposed to be imposed today before they make a decision on whether or not to approve this deal or not. So first we had a deal, now we don't have a deal.
So if you look at the chart of NXPI, it blasted off last night on the official report that the deal was done, and obviously, it's going out to the takeout price. Risk ARBs, jumping in there for that. Anybody who's buying NXPI up at 124 last night instantly punished here this morning because obviously conflicting reports. And they're not saying it's not going to get approved. They were just saying it's not approved yet. So I think this deal probably still gets approved. I think that's, what your risk ARBs are thinking here too. But there's a discount. There's almost a 10-point discount here on NXPI. So there's still some risk here involved. As of last night, there looked like there was no risk, and that's why they bought up to 124. But now all of a sudden, there was risk again. And Qualcomm was rallying big time on this last night, which kind of was a head scratcher for me, which is why, I was looking at it more from the short side. It's back down here now, 59.95. It's trading under 60. I mean, it looks like if it gets approved, it looks like they want to buy it. So keep an eye on the headlines. A lot of headline risk in both these stocks.
I don't know who was playing this NXPI. It might have been BZ Tokyo here in the Google chat. So it got that nice pop in rumor, no rumor. I mean, if it gets near the takeout price, I don't know why I guess it got right up there to 124. Right at the 8 o'clock close. So that was did it spike up to that area before?
It traded up there for like a good hour, Joe, hour and a half.
Wow. I mean,
traded up there over 124 all night because it said like it was reported, from Wall Street Journal, had actually broke it too. So they obviously, got that source of China that Spencer was just citing. But, there was a story and it was saying that it was approved. So you're thinking, okay, well, it's a done deal. So NXPI is going back up to the takeout price. All of a sudden this morning, it's like, no, it's not a done deal. So then risk ARBs are like, oh, and they start selling.
Okay. All right. The Qualcomm found that support at the $50 area a while back. And then just keep an eye. We had a high at 62, Dennis, just over 62 at 62.65. That was actually last week in the after hours trading. He didn't quite get there. Tight ranges the last few days. Really, how many not inside days, but 59, that seems to be pretty good support. Those are your last 2 days lows. And going back on the upside, after you made that 62, 65 high, you had 4 highs at the 60-40 area. So if we climb back into the $60 handle, look for sellers that were there for 4 days in a row earlier in the week.
Marvel and CAVM were both trading up on this news last night. That's obviously not happening this morning because we don't have a deal approval, but they're waiting for the same thing. They're waiting for China approval on their deal to go through. So they were obviously thinking last night, well, if they're approving Qualcomm the NXPI purchase or the Qualcomm purchase of NXPI, they're probably going to purchase or approve the Marvel CAVM deal as well. Now, because that is potentially not approved here, you saw CAVM and Marvel both come back down from where they were trading last night because Marvel was up 3 or 4%. Full disclosure, I've got the pair on there, so I'm long and CAVM, short Marvel, which is it's the risk ARB play.
Okay. All right.
And that's just something just overnight just to take it out.
All right, so S&P futures leaking a little bit here. I know we had some guys in the chat here that were looking for 27.90 today. That's not going to happen. I don't know how much more downside we're going to have. Big number on the downside, folks. We had Thursday's low at 27.72 We hit 72 even in the pre-market. So that is just really, if that does not hold, folks, we are going to have some good downside action here, maybe as low as 27.55.75. That was your low last Friday.
We just got some guidance from Steel Dynamics.
Let's see.
Strong Q2 EPS guidance. $1.46 to $1.50 is the range that they just gave. $1.33 was the estimate. They say it's due to expected to be meaningfully higher than in sequential first quarter results based on increased steel shipments and metal spread expansion. The company continues to experience strong steel fabrication order activity and increasing order backlogs. So STLD.
You know what? And it's up on 800 shares, so you can't put that much weight into, and it's already getting offered at 50.59. So it's not like this is blasting up on volume. That being said, if they raise guidance, usually the stock will go higher. But what are your thoughts here? I mean, you look at U.S. Steel, NUE has had a hell of a rally. Full disclosure, that's the one that I own in my investment portfolio. I still feel like it's best of breed. The only thing with NUE is that's coming into the 70 level that it has just failed at a bazillion times. I almost want to sell it at 70 because every time it gets up there, it seems to go back down to 60. But, you know, I've got in my long-term investment portfolio. I've had in there for years. And I try to separate in my portfolio. I try to separate my long-term holds from, you know, swing trades and, you know, shorter-term stuff or speculative stuff. And NUE's been in there for years. But for some reason, I just want to sell it. Well, for the obvious reason, I want to sell at 70 because it keeps failing there.
All right. I see what you say. I'm looking on the monthly.
You see that NUE?
Yeah,
That's 70. Just like
70,
the Great Wall of China up there.
70.48, it hit it and then repealed back. And then the next 2 months failed up in the upper 69 handle. So 68, 66. I mean, it's getting back to an area that it has not seen since July of 2008. So, I mean, you could take the stock off here. I know you don't like to do options to get your positions, but you know, maybe put a, you know, pick a stop. You know, 68, 66 is not 70, but you know, maybe put a stop at the month. I know you don't like using stops, but a mental stop like this monthly low is 65.24. And if it takes that out, you're done. But if it continues and finally goes through 70, then you're still in the trade. Looking at the stock that was in the news, STLD, as Dennis mentioned, up on light volume here, 50-60. You just hit that. This has had problems at the $51 area on a couple occasions. 51 to 51.45 would be major resistance if it can clear this current pre-market high of 50-60.
Who reported guidance from a steel stock? Didn't we have one yesterday or the day before? Didn't we just have somebody report guidance? Spencer?
Was
it X?
Yeah, that was
chat. Help me out here.
That was Nucor. That was NUE.
That was NUE. That reported guidance.
Yesterday
it was good. Okay, and that's why NUE was up yesterday.
Yep.
Okay, now you get Steel Dynamics. You got the X. X is just sleepy, Joel. I mean, I don't know which way it's gonna go here, but this, you know, it kind of looks like it wants to go up, but at the same time, you know, there's all kinds of overhead resistance, 38, 39. We've been up here a million times. I don't know. I'm torn on this one.
Yeah, it's consolidating. 30. Yeah, 30. I mean, if you want to play like a breakout or a breakdown, this stock has been trading from 36.40 up to 38.40 since June 5th. So that's a $2 range, but keep an eye on those levels. I think I would get on the bull bandwagon here above 38.40 and look, get a little bearish under the 36.46. But when it's consolidating like that, you know, don't mess around in the middle. Wait for them to go one way or another.
We got 5 minutes here before we're going to get imbalances. Remember, it is quadruple wedge here.
Yeah.
Let's talk the banks. We talked a little bit on the pre-market show. Deutsche Bank is back below $11. I'm going to continue to pound the table here that we are not out of the woods over in Europe on these banks. Everybody, I keep looking at, you know, my CNBC or seeing my Twitter timeline, and everybody's saying how cheap the U.S. banks are. I think I'm the only bear on the street on the banks. I've said, you know, publicly that I'm bearish the U.S. banks. I continue to remain bearish the U.S. banks because I don't know what is going on in Europe. I don't like the pricing action of any of the European banks, not just Deutsche Bank. You can look at Banco Santander, SAN. You can look at, you know, Barclays, BCS. All these stocks breaking down again today. All these stocks near multi-year lows. Deutsche Bank goes under $10. The U.S. banks all be making new lows on the move. I'm calling that right now. We're back down near the lows on Deutsche Bank at 1086. We're not quite to the low at 1057, but it's time to start watching that. If Deutsche Bank goes below $10, I'm not only going to say the U.S. bank stocks start making new lows, the S&P start to roll over too. So keep an eye. I do believe the next catalyst to bring us down. I don't know what's going to happen. But when Deutsche Bank eventually falls below $10, which I believe it's going to do, I think the S&P start to roll over.
You know, this took out a pretty, I mean, it's spotty here because we're the secondary market, but this stock was being supported over the last 6-7 sessions at 1070. And it opened up and it took that out. And now we're trading in the red here by 1048. So Dennis is talking about $10 on the downside. I'd say until this thing gets back over all those lows, maybe closes over 11, I see continued downside here for Deutsche Bank. And Dennis, these financials, I mean, you look at, you know, this Goldman Sachs chart, tried to get off the mat here. It just kind of looks like a dead cat bounce off that, you know, you had a low in the 220s, 224.09. I mean, this stock began the year it ended last year at 254.76, hit a high at 274. This is 40 points off that level. Bank of America is looking kind of heavy here. Can't get back over 30. Citigroup. Wow, Citigroup is right near the low of the move here. You know what? They weren't hawkish enough on Wednesday. They weren't hawkish enough. The Fed knows that you got to keep some bullets in the chamber in case the economy slows down. And I just don't think interest rates are going to be going up as fast and as high. I think it's all baked in. I think in that
that's a little bit too. But I mean, when you see the S&Ps, and we've been on a pretty good run here, it's very rare to see the S&Ps climb. And look in the last 2 weeks, we've went from 266 on the S&P when you had that little fake out low there, or 267.76. We're up. We're up 100 points. If you're looking at the S&Ps, really, we're up 100 points here in 2.5 weeks. In that same time frame, Bank of America is down. In that same time frame, Goldman Sachs is basically down. Morgan Stanley is down. Citigroup is down. The banks are not participating. Not only that, they're going the opposite direction. And that's telling you that, yes, okay, maybe it's interest rate concerns, but I also think this Deutsche Bank thing is not helping. And this European bank thing is not helping, because these things start going down. You can say, oh, yeah, it's just a Deutsche Bank problem. Well, it's not. It's a European bank problem. So you can say, okay, well, it's just a European bank problem. Well, all of these banks are in bed with each other. There's all counterparty risk. So if for whatever reason we really start to get into trouble over there, there's going to be trouble over here too. Don't kid yourself. So, I am concerned about the European banking situation. And the S&Ps are falling out of bed, so maybe they're listening to me right now. But
are you moving the S&Ps too?
I'm moving the whole S&Ps now,
gosh.
Joel. But
Jesus, Murphy, holy
that's
mackerel.
a coincidence. But
Bank,
anyways, I am concerned about, and that's one reason that I'm cautious on a lot of my investments right now.
Okay, all right. XLF. Let's just George mentioned that, and just to take I know it's kind of a little bit of a slower mover, but just look at it ran in a lot of problems at 28 and change, and now it's turned a quarter again. It looks like it just had another dead cat bounce, falling down here.
It's ex-dividend today too,
okay.
So you got to do the adjustment on all these. All your spiders are ex-dividend here today, so keep that in mind when you're trading these.
XLF, the low of the move, and this is the super extra major support. You had the same low in April at 26.55, low in May 26.46. So 26.50 on the horizon here for the XLF if these banks can't turn it around.
Spencer, we got 40 seconds. Oh, there's no guest today, right? No guest day?
No guest day.
Okay, so we're just riding. So I'm really curious on these imbalances here, because S&Ps are moving. So just quickly before we go to them, we'll jump over just to a couple other stocks that were on my list here to talk about. And one was Spotify. What a move yesterday for SPOT. This stock was just consolidating for 3-4 days with 4 lows in the same area, 170, and then it hit blast off, along with every other IPO yesterday. DBX and all those took off too, but Spotify blasted off SPOT.
Yep, you did blast off. You made a high, big old thick green bar, 180.02. That was a high. Backed off the close of 78.10, trading in the pre-market, a little bit in the red. So 2 good numbers for you. 78.10, all-time closing high by almost $8, $7. And 180.02, maybe got a seller looking at that area. Big volume yesterday as well on a big up day.
S&Ps continue to roll over. The imbalances are huge both directions. Again, It is quadruple wedge. These numbers all float around. Like I see right now, a lot of the banks have buy imbalances, big ones. And then I see a lot of other stocks having sell imbalances. But again, you know what? You just can't look at these numbers and really draw anything from it, because there's going to be so much institutional action. These are going to flip around. They're going to go big sell. They're going to go big buy. Just be aware that stocks can open out from where, the fair value is very easily on days like this. So, if you're trading at the open, sometimes you get an opportunity to get, a stock maybe you wanted to buy on the cheap, or maybe, short a stock you wanted to when it opens up a little bit too high. So, anything that's opening flat here today is probably, not a bad idea to be looking at, locking some profits, considering that the S&Ps are really rolling over right now.
We're getting some news out of China. China's going to be, and this is from Bloomberg, China will be implementing measures, tariffs a similar size against the U.S. A trade rep said that
Trade war.
the Chinese tariffs will impact 818 product categories, totaling $34 billion. So, yep, it's happening. And it's going into
that's the news.
Tariffs going into effect July 6th. Excuse me, July 6th.
All right. I mean, this is all Trump. He wants to start a trade war with everybody. I guess he got it. So we were on a trade war with China. Then we weren't. Now we're back on a trade war with China here. So who knows? The next headline will be, oh, there's no trade war and the markets will rally. It's headline risk all over the place here. But markets, something else for the markets to be nervous about. Not only the problems over there in Europe, but the potential trade war.
Wait, wasn't the world okay on Tuesday that Trump made up with North Korea and the world's fine and a great accomplishment?
Yeah.
Wasn't that on Tuesday? What's this, on Friday, where things are already back into full? I mean, we rallied on that, but really what was accomplished there? I mean, they already said they were going to denuclearize, and here we still got the same problem. So, one thing Nick always mentions, headlines, headlines moving the market. Well, that's what you have here. You got a headline market driven by the tariffs here, China retaliating. Here we go again. I wish I would have got you on an S&P bet, but now I know there's no way you're going to do one with me with the SPOOs here at 27.75.
What about the semis? And we're just looking here and, we've seen a massive rally in the Qs, but some of these semis just are not participating at all. Applied Materials, Lam Research. I mean, even Micron to a certain extent is starting to look a little bit. It hasn't participated at least in the last few days. I mean, what's going on with Applied Materials and Lam Research? It all started with that, LRCX was selling off really for no reason. And that reason has just continued down here. Now 179 continuing to break down. I mean, this is an ugly chart.
And it has. I mean, ABAT had earnings a couple days ago, didn't they, or not?
I can't. Maybe it was. I see the gap in the chart. That must have been from 2-3 weeks ago.
Applied Materials.
There
was a big gap down back in the middle of May.
They had earnings back on the 17th, right?
Okay, so that was earnings. Anyways, just looking at these charts of LRCX and Applied Materials, this Applied Material looks like it's ready to roll over too.
Yeah, it's down 39 cents here in the pre-market trading. 47.74. That's the low of the move. That's only $1.60 away. And the Lam Research, I mean, that had just that mysterious sell-off like 4 or 5 days ago. Really no news accounting for it. But like you said, Des, like, who cares if there's news or not? It's going down, right? You don't have to have news to see that if you're long it, it's red here, and it's continuing red here, down $2.15 here. I don't know, taking out that support that held in April, and it also held yesterday. So taking out 181, if you get any rally back to the 181 area, it's going to be major resistance.
Couple other stocks here. All of those, I had all these the esports plays all on my list to talk about here, and they've all blasted off yesterday again. It was full risk on yesterday. Take-Two was up another $3. You had EA, it was up another stick anyways, and then ATVI, which is the other one. It was blasting off too. I mean, these stocks were just flying yesterday. They're all pulling back here today, and let's talk about the thought process overall here. I mean, we're getting a pullback. It's probably going to drag down a lot of the leaders there too. But I mean, what the leaders were yesterday usually will be the leaders again, if the market goes to turn around. What do you think here, though? I'm torn here. There's some more things to worry about here all of a sudden. Do you think, this is going to be more than a one-day sell-off here that we're seeing right now? Do you think we're going to bounce right back? Are we BTFD, here again? Chat, what are your thoughts here too on this? Are you guys buying this pullback?
I'm not. And there's a number on the upside, and the S&Ps couldn't have spelled it out for you any better, Dennis. We put a quad top in here. Listen to the highs in the S&Ps, and I can do it in the spiders if you want. You had a high on Monday, 94.25. Your high on Tuesday, 94. Your high on, or does that go back to last week? No, yeah, Monday went, yeah. Every high this week has been between 94 and 96. Until we break above that area, I think if you're shorting here, you got 20 points of risk and you have 150 points of downside here. Until we clear that level. Also, Dennis, it's a quad which which we didn't get to mention yet. In a quad witch, that's when you have expiration includes stock index futures, index options, stock options, and single stock futures. And many times that is a significant turning point in the market. Now, since we rallied into it, we are showing weakness. I think this could be a turn. I don't think we're going back up to all-time highs. I think we're going to go back down to 2,700.
We're getting hit pretty hard here right now, I'll tell you that. And the one thing on the S&P charts when you do look at SPY is if you go out to the monthlies, we really struggled here at 280. We're right back to the same area we were struggling before. So put in two highs last couple of days, 279, 33, 279, 48. We got a lot of other sectors not doing very well. I mean, your dogs are your dogs, like General Electric are obviously, being their usual self here. GE had a horrible day yesterday and an okay tape. Didn't matter. I mean, you can look at some of the other ones too. IBM, ugly day for it yesterday as well. So yeah, a little value rally there for a few days. It's starting to look not as good. I talked about the retailers yesterday saying I thought the retail rally was over. I sold Macy's at the open. I was instantly up 1.5%. Like, I mean, in less than like 3 minutes. Macy's opened at 38.30. I was just playing, what I was saying. I shorted the open on it, and literally like, I don't know, like 5 minutes later, the thing was like 37.5. So there is retail sellers here now.
You didn't go.
Now, Goose, different story. Certain retailers can do okay, but I'll tell you. And what was the other one we were talking about? Oh, it was Tailored Brands, TLRD. How'd that do yesterday? Yeah, gave it back. So we said the same thing yesterday. I was like, I'd be a seller of that rally that we had because we had rallied from 26 up to over 28. And obviously it gave it all back as well. So I'm sticking with it. I think the retail rally is topped out. I think retailers are now bounce. I think the rips are to be sold as opposed to the dips to be bought in retail. So I don't like retail. I don't like the banking sector. Tech is still hot. If we lose tech, then we lose the overall market.
We got the bear on the prowl here.
I know, and I'm long stuff still, but we still have tech. And tech, even this morning here, yeah, you got some tech stocks rolling over, but not nearly as much as the S&P. So there's problems to worry about here this morning. It's funny how stuff can just come up all of a sudden here. So I think, like I said, I haven't liked banks forever. Retail, I haven't liked for the last 3 days. I thought it topped out. Tech is still okay, but it's on watch.
The spiders, I know you like to refer to those as well, Dennis. You mentioned two highs, but all the highs this week in the spiders have been between 279.33 and 279.48. So that's a pretty tight range. So you had people trying to sell on strength, which is different to trying to sell into weakness here. So we'll see if they step down those orders. But you can't argue with the resistance that the market has put in. And also with the expiration could signal a turn in the market. Let's see here. S&P 75.75, 76 even, down 12.5. Really can't get super excited until we take out that 27.72. 72.25 was yesterday's low. 72 even, holding up so far this morning.
Let's jump over to a couple other stocks. Then it's funny. PayPal. I had a lot of stocks here, and here's where I'm off today. Is I actually had a lot of stocks that I was looking at as potential breakouts. But now that you look at the market and what it's doing, it's like I think I got to back off that plan, and that's what trading is all about. You can have a plan, you can do your homework, you can come in, and it throws you a curveball, and you've got to adjust that plan. So on my list for potential breakouts here, and I'm not doing these now because of the market, I had PayPal because PYPL was looking like, oh, that looks like it wants to go. I also had even FireEye I was looking at, FEYE. That kind of looked like it wants to go. A little stock Veritone, which went the last few days, I was looking at that one as a potential momentum play. But now that we're losing some of the overall market, you got to put those strategies on hold. Now, I don't say you get rid of them altogether, but you just got to be cautious because, if we go into a little bit of a sell-off here today, you're not going to see these stocks breaking out.
Nope, and resistance is resistance, right? And so respect that resistance. You got the S&Ps. JVS Rancher, may be new to the Google chat. Please let us know how you found the show. He wants to know if it's too late to buy that DBX that you were talking about a couple days ago.
It had its big move. It's hard to chase something that ran 15% yesterday on basically no news. So could you buy the pullback here? Yeah, if you get a pullback. I don't like chasing stocks. I got on this before the train started moving at 31 because I was anticipating that. I liked, the one candle. And I was like, oh, I had the nice candle the next day. I was like, I kind of liked, that it looked like it could potentially break out. It did. Now I'm still in it, and it got up to 38 yesterday, so significantly off the highs. I'm, still, if I'm looking at it, I still like it, but at the same time, you just got to be cautious because this is a big gain very quickly here. So there's nothing wrong with locking in some gains. Am I coming in here and buying it up 15, 20%? I think you're chasing it then. I've never made a lot of money chasing stocks.
The Brunster got a comment from Dropbox yesterday. Nothing new on our end. Notes the company's in a quiet period, hasn't held investor meetings or put anything material out overnight. The only thing is Dennis liked it on the pre-market prep show, and that's pretty much that.
There was a lot of our chat like DBX, so, and everybody sees that breakout over 32. It's all about momentum. And yesterday, IPOs were just hot. Anything that had an IPO in the last 3 months was hot. We talked about Spotify already, DBX, all this other stuff, all those China plays were just exploding yesterday. HUYA, IQ, they're all cooling off a little bit this morning, even though they're still trading up. But the market is putting a drag on a lot of those. If the market goes to rebound here, the stocks probably all rebound very quickly as well. So you just got to be aware that, right now the market is weighing on these stocks to a certain extent, even though they're trading higher. They probably want to go higher still, which is unbelievable. But that, and especially when you see them up in a down taper. I mean, it's terrible taper today, and some of these stocks are still in the green. That's really unreal.
And just talking about some of the big movers, how about Netflix not blinking here? Citron says Netflix bulls need a reality check. And man, oh man.
When did he say this?
He said this yesterday at 12:54 and 37 seconds. And you know what? Yeah, I don't know. Didn't move the stock. It actually.
He's losing his touch.
Yeah. Yep.
Can't fight Netflix. You know who had a good call on this? And I don't know if you're listening this morning.
Oh, I know.
Jeremy Newsom. Jeremy Newsom on our show back on May 24th.
Can we call him real quick? Can we call him real quick, Spencer? See if he's on Skype.
Call him on the fly?
Yeah, call him on the fly on Skype.
I'll text him first. Let's see if he's awake. He's an hour behind.
Awake,
he's an hour behind us. All right.
He's awake. He trades in the morning.
All right.
Call him.
It'd be good to give Jeremy a call because I just recap. So May 24th. If you look at where Netflix was on May 24th, it was around 350.
Yep.
And he said this stock's going to 400. It's 2 weeks later, and it's basically 400, 395. So great call by Jeremy Newsom. I know he's been kicking some butt over there at Real Life Trading. So good job, Jeremy. Great call. We'll see if we can get you back on the show. Maybe today.
Can I?
We are going to get Jeremy.
I'm just going to text him to see if he's.
I'm adding him to this call. See if he's around.
Okay.
We're just catching him just like this. He's going to be like, whoa, what's going on?
I don't know.
You're getting him out of bed.
I'm not sure.
7:44 in the morning there.
Yeah.
Is he work? I know he get going at 9.
I don't think he's ready.
Okay.
Yeah.
All right.
He's probably with his own chat, actually.
This is why you text and you
you got to schedule. He's a busy guy.
This is why you
got Jeremy's schedule. You can't just get him out of the blue. Anyways, it's a nice try. Jeremy Newsom, great call, buddy.
Okay. Yeah, and that stock's trading in the red a little bit this morning at down $1.47 at 391.40. I mean, what are you gonna do? Keep an eye. Forget the all-time. Wow, the all-time high and the all-time closing high, very close. 93.23, 92.87 close. You got to think, man, is it gonna get to that $400 magnet? All right, S&P is trying to rebound here, down 12.75 here at 75.75. Dennis, are they flipping those imbalances at all, or are they?
They're all over the place. So some big sell, some big buy. ExxonMobil 1.6 million to sell, Chevron 970,000 to sell. Those are so big. On a normal day, you'd be like, "Whoa, these stocks going to tank." But everybody knows there's going to be somebody that's probably taking the other side of some of these trades, or there's going to be more adjusting happening here yet. So that being said, the way I approach these days, let's just talk about, quadruple witch and talk about, how you approach these days, is I basically just play, what if, the game. And if the stocks open too low, I'm willing to buy. So the way I do that is, I'll look and, I have, different, algorithms that can, trade off of this too. But, even from a manual perspective, you see a huge sell imbalance and you say, well, okay, well, Coke's got $1 million to sell. If Coke opens too low here today, I'll buy it. So the way I would play that is I would put an opening only order. It's called OPG orders, and that will execute you on the opening print, or it will cancel if your price isn't met. So let's just say, for example, if Coke opens below 43.30, I want to buy it. So I'll put your order to buy, let's just use a hypothetical example, 1,000 shares by 43.30 OPG KO. If it opens at 43.29, I will get filled at the opening print of 43.29. If it opens at 43, I will get filled in the opening print of 43. So you'll get price improvement. You won't get the 43.30. You will get the opening print, whatever that is, if the opening print is below where you put your price. Obviously, if I put the price to buy at 43, it opens 43.05, I'm not going to get filled. So the way you do that is, you might spray out, maybe 30, 40, 50 different stocks. And maybe 4 or 5 open too low. Now you're long those stocks all of a sudden. And if you think, they're going to come back up because they've opened too low, that's the alpha you're trying to extract. Then you try to flip them when obviously they pop up. Sometimes, hedge it with the SPY just to get rid of the market risk and wait for it to come in. If you're doing stocks like Coke and Procter Gamble, a better hedge is sometimes the XLP. It's all about knowing your hedges. But, that's the one thing that can happen is a stock might open too high or too low. And if you, get that opportunity, sometimes, this can be some great trading on these days. Historically, my best trading days of the year are always on the third Friday of the month because you do get a lot of institutional action, a lot of institutions trading for a number of different reasons, and that can push the price up or down too much. And that's where, as a trader, opportunistic trader, you can take advantage of that institutional action.
Angel John Bacon, is there any services besides Ready Plus to get imbalance feeds? Dennis, who did you mention? Was it?
Well, Interactive Brokers has it. You can just enable it. It's free. It's coming from the floor to somebody from the floor, and I know IB has it. So, and I'm sure a lot of your other brokers have it too. Call your retail broker and say, look, can I get the morning imbalance feed? It starts populating the imbalances come on the New York Stock Exchange at 8:30. That's when they're first published, and then they adjust for the full hour until the stock's open. On NASDAQ, they don't publish the imbalances until 9:28. So that's why we never talk about NASDAQ imbalances on the show, because we're not on the air at 9:28. By 9:28, they will show, whether, there's, and then they actually show the opening and indication price as well. So that's when a lot of stocks, you'll see violent moves on NASDAQ stocks at 9:28, because all of a sudden there's new market information out there to every trader out there. And if a stock opens like it looks like it's going to open $1 lower, people will hit the stock in the pre-market, down 20, 30 cents to try to cover it, where it's going to open, which is, significantly lower. Now, just because the stock is indicated to open at a certain price, even at like 5-10 seconds before the open, doesn't mean it's necessarily going to.
Yep.
Another order comes in from another trader, and that can offset it. Little difference in the NASDAQ is they often don't allow you to participate in the open. There's only 4 traders that can sometimes get in after 9:28. So they kind of close the auction for the opening at 9:28, which makes it a little bit trickier to participate. But the NYSE leaves the auction open right until the stock opens.
Dennis, just talking about your strategy. I mean, did you go with a market limit on Macy's yesterday? Because it closed 38.37, ended up opening only 7 cents lower. Did you go like an offer at like 38.20? Because I know you just didn't put
I think it opened at 38.30, didn't it?
Yeah. You didn't put a market order in, did you? Or?
No. I always put limits, and I never use market orders. We're talking a little bit strategy right now. Market order is like a blank check. I mean, you could just do market on open. You can do market orders, and then it's going to give you the open no matter what. But that's like at the close, they're called MOC orders. That's just market on close. Give me the if you're saying buy market on close, it's like buying the stock on the close no matter what the closing price is. Well, if the close gap's way up or something, you could get a really bad price. So I never like to use market orders. I use limit on open. So on NASDAQ, if you're trying to place an order for the open, it's called a limit on open order, LOO. On New York Stock Exchange, they're called OPG, opening only orders. So different exchanges have different terminologies. The order types work the same way. You're trying to participate on the opening print, and you're putting a price there to participate. So I'm not just selling at the open randomly, at any price. Or buying at the open randomly on any price. I want to have a limit on my price. And I stress, as traders, always put a limit on your price. Market orders are very scary, especially when the market starts moving.
I think BZ Tokyo here in the Google chat must have ESP here, because he just said, Joel going to sell Twitter now, is what he asked me here in the chat. And I'm looking at my phone here. I don't look at my phone during the show, but I just got a text here from Sean Udall. Okay. And he said, even Twitter is a pretty good sell now.
It's crazy. Well, look where it's went. So Twitter has went. This market is going to
I might
top
sell
out
it.
some of these.
I
Some
don't
of these.
know.
Some of
I
these stocks
can't
have just
sell it.
gone crazy. I totally agree, Sean. This has went now from $28 to 46, and in like 5 weeks. Now it's gone silly. So, and we'll watch Twitter here. We're coming, it's 40. It's down trading the red now. It was trading in the green earlier.
Knocked it down, Dennis.
Market is starting to roll over. I agree. I think if you're in these stocks, you got to ring the register. I'm looking at a lot of these, that I'm into, and thinking about ringing the register on some of these Momo plays as well, because they're extended. Can it continue to go higher longer term? Sure. But there's going to be pullbacks. This stock's going to be down 10% one day. Everybody's going to be like, what happened? Well, it just went up. It's up 40% a month. So it's just a natural correction. It needs to correct, and it will here at some point in time. So when the ball turns, there will be some money made on the short side on this.
And holy mackerel! I mean, did you see the the love that this got from analysts? I mean, we always talk about analysts chasing price, right, and kind of being in after the moves. Let's look at some of the love that Twitter got here. I think just in the last week. Okay. Argus. Maintains a buy, ups their target from 40 to 50. And then, well, I guess there's not that much in the feed. I thought we had more on Twitter. Didn't we just have some price target changes or something?
JP Morgan did something, didn't they? Up to $50 a few days ago.
Yep.
Analysts chase price. We know that. They're all just, and some of them, are out there, but a lot of them are just chasing price. Their price target's out to lunch. We better raise their price target here because we're looking bad when we got the price target of 30 on Twitter and it's trading at 46. So, there's always adjustments. Then people get all bullish. Oh, they raised their price target. But a lot of this is just they're chasing price. They're adjusting because their last price target was out to lunch. So they're adjusting it there. So it's funny how some people will just follow the analyst rating so closely there. And I follow them too, and I trade them. But at the same time, I'm not making my long-term investment decisions based on the fact that JP Morgan raised their price target from 40 to 50. Make your own decisions. Use all the information out there, but don't just blindly follow analysts, because I think it's a way to lose a lot of money by just blindly following the analysts.
You know what? I have it in the never sell portfolio, so I guess I could never sell it. But
you're holding your Twitter forever.
Yep. Forever.
I always say when a stock doubles, it's not a bad idea to sell half, and then you're completely playing with the house's money.
It doubled to 34, Dennis. So that's
now you can really, rake it in. So you sell half now, and you're not only playing with the house's money, you're actually pocketed some of the house's money here, and you're playing with the house's money. So that's even better.
All right, let's just look at the daily chart here, and I'm going to need a little bit more consolidation here. 44.50 was yesterday's low.
Rocket ship mode.
46.8.
We aren't that good, Joel. I'm never in these. I'm in the boring stuff. Spinner was saying earlier, I usually trade boring stocks. It's hard to figure out. It's one thing to say, okay, the stock's looking like a breakout and it goes. But now, like DBX goes up like 20% a day. I'm like, okay, what do I do now? Figure out where to exit a trade. That, is something in my 19 years of professional trading, where I have made, over 1 million physical trades, or maybe even more than that. I still am not very good at exiting trades, figuring out what the optimal level is to exit the trade. I make money. I'm consistently profitable, but I leave a lot on the table still all the time. How do you better exit trades?
Like just when they're going your way, like with the IQ. I mean, with the IQ, I know you.
Yeah, like what do I do? I've lightened up along the way.
I mean, I wasn't long it, so I don't know. I can't say in hindsight, but I was like, keep raising your stop, and that was in it when it was in the 30s. Now I don't know if it would have gotten here or whatever. There was because there's been some.
Well, there was some wicked ones. I mean, that's the trouble. It goes up to 32.40 on the 4th. Then the next day goes down to $27. I mean, you're talking about. A 5 point, you're talking about like almost a 20% fall in 2 days. These things are wicked, but then it's right back up again. So what do? You give yourself like a 30-40% cushion on a stop. I mean, that's tough to do too. If you're, putting stops, you're probably getting stopped out along the way. I mean, even Sogo, me and Spinner there, were trading that. Spinner was all over it early, but I remember, not Sogo, what was the other one we were trading there? Or BILI. Both of us were looking at this, and it had a nice bounce up to like over 18 and then pulled back to like under 16. I got stopped out on that. I was like looking at this, and this thing had a pretty good reversal day going. And, and you look at it, here it is 7 days later, it's way higher. It's tough. They're tough even to chase them up with stops because you get stopped out.
Okay. Let's BZ Tokyo has some puts in Micron here. That's an interesting chart, trading down 44 cents at 58.76. A big area to keep an eye on here is a $2 lower. A pair of lows at the 56.70 area. So that's what I'd be looking at, potential target. It had a gap up from that area, I think, when they did a buyback. So that's your support. If that's broken, that's got some room on the downside as well.
It looks heavy to me too. I do have it in my long-term investment portfolio, a small position there, but as a trading perspective here, this looks toppy to me too.
All right.
It's struggling at the same area it struggled back in March. I mean, I can get on board with saying, I think Micron's going lower.
Okay. All right.
Talking against my book again. The only guy that does that.
All right, Dennis, it's 8:56, and we're going to have to wrap up today at like a minute early because I've been asked to go on the TD Ameritrade Network to talk about the
Look
market.
at you, Joel.
Supposed to be on.
Nice.
Yeah, supposed to be on at 9:05. So we're going to end here.
What are you going to talk about on TD? Preview what you're going to talk about.
Well, they asked me.
We just talk about it the same thing, but do it now. So we scoop them.
No, we don't want to do that. I said, quadruple which is that, which is sometimes a significant turn in the market. I'm going to talk a little bit about that. I'm talking, the winners continue to be winners. We'll see if that continues today. The Netflix, the Tesla, the Twitter. Talk a little bit about what we talked about on the show. Retail's just been absolutely hot. Is that going to turn? The financials, the concern, that we've had. I don't think I'm going to have time to talk about all this. And I'm going to have to do some research on the weekend. This whole AT&T TWX merger. Did you see what Comcast has done off this, Dennis? Comcast bottomed at 31 on Tuesday or Wednesday, and that's exploded.
Disney too.
Yep, Disney.
They both exploded.
You also made a good call on Lionsgate, and you also made another good call on AMCX, Dennis.
What do I do with this one?
Oh.
So here's one. I came in this stock buying it at 51.52, and I said eventually I see it get taken out at 75 or 80. Well, it's run up to 68 on really just nothing. I mean, just because it might, people are starting to think, yeah, maybe I'm right. Maybe it is going to get taken out. But I mean, at a certain point, if it gets high enough, that was the premium that I was trying to extract, and it's going up there on no takeover.
You got to get it.
So I think it's still a candidate to get taken over. I think it could still go off the board at 75 or 80. But now it's given me, I'm up like 16 points in this on $51. It's hard not to book some of that. No.
Spencer, just bring up the monthly chart here for Dennis so he can take a look and see that this stock
peaked. Where I sell AMCX again, struggling with the X.
I want to get it 68 to 70 here. I think I'd like to see it get up in that zone and break out over 70s is a major, but this 68 to 70, that's a sell zone. 67.61 was your high in February of 2017, and it failed. It failed at 67.44 in July of that year, and August touched it too. So it's at a major resistance area, Dennis, really 67.5 to 70. So you want to see it clear there for the rally continue. But the last 3 months that it had this price action up here pulled back. All right, Spencer, let's wrap things up here and preview the show.
Wrapping things up. So if you want to catch our podcast or listen to any part of our show again, you can do so. iTunes, SoundCloud, Stitcher, TuneIn, or YouTube. Just go to any of those platforms, search for Benzinga or PreMarket Prep. Thanks to all of you in our chats today, youtube.com/BenzingaTV and premarket.benzinga.com. Hope you all have had a good morning. You have a good rest of your day. Everyone have a good weekend, and we'll be back with you on Monday.